Hello, everybody, and welcome to the Dash Trader Newsroom, sponsored by Cobra Trading and Ben Zinga. This is the review of the number one best trader competition. This is our third week review of the number one best competition for 2023. Joined here by Jill Malandrino, Global Markets Reporter, and I, of course, am Michael DeJoy, Director of Sales and Education with Dash Trader. Jill, how are you?
Good, doing well. Happy Friday.
Another Friday. Here we go into another weekend. And the competition for week 3 is over. This is the week of February 13th to February 17th. We've had, really an incredibly profitable competition this time around with best 1063 with a $278 gain today, but a hefty 51,000 in total competition games. We have best 1015 with $11,000 up today, $43,000 in total gains. And you see best 1057 with $3,242 worth of gains and $18,000 for the total competition. Really, third place is really being vied for between best 1044 and best 1057 as they vie for third place. Very, very close third place race. This is entering into the last week of the competition. So what are your thoughts at looking at these numbers, Jill? Is it kind of fit with what we've seen in the market? We've had a pretty straight up January into February. Now we had a little bit of turbulence, so things have slowed down.
Yeah. Well, I think what's impressive is the divergence in performance between the first and second place relative to third and fourth, and then the remaining contenders. So I'd be curious to understand what types of strategies are they using, the frequency that they're trading, the volume that they're trading. Was it done on, one or two massive right trades, or is it, based on frequency and volume? But I believe, Mike, since we've been covering this is the first time that the top 10, everyone is
green. Everybody. Yeah. Yep. I mean, I would say number 10 is nominally green at best. I mean, zero gains, zero trading for today, but $39 in the green. But yeah, usually we've seen usually it's between 5 and 7 being solidly green, and then those next 3 to 5 are smatterings of red. But not this time. We see everybody in the top 10 green.
Yeah, I would imagine either a little bit of dip buying, certainly a lot of short covering, which I'm sure we'll get into. Yeah, it's a tough market to short.
Certainly is. And I mean, so we do see the standard kind of strategies that we've seen in past competitions where people seem to be trading these one-day poppers and droppers. So we had OKYO with a 134,000 share trade count. That is a $3.71 stock. You have UUU, which again is $2.44. We have DKNG, $20.55. We have AMCX. With the exception of the 3 and 4th position, 3rd and 4th position, we have all stocks that are under $10. So you see these one-day pop and drop stocks. All right, so now we also have the old standbys NVIDIA. We have X, US Steel. I don't see. Yeah, there is our AMC and our AMD and our TQQ. We're seeing the standard stocks that we see. We have Amazon on there, so the normal go-to stocks are there as usual. Any thoughts looking at the symbols of stocks that have been traded?
To your point earlier, it's not that they're the same symbols, but it is typical in terms of stocks that are moving, whether it's a social media move or there's specific news on it, or they tend to be less capital intensive because the actual dollar amount of the stocks are a little bit lower. But you're always going to have like the high volume stocks in there, such as Amazon, NVIDIA, AMD. I think AMD comes up every single week, which is no surprise. I think virtually weekly AMD and Micron are the top in terms of volume with NASDAQ 100 stocks. So those I'm not surprised to see. But, in terms of composition of the types of stocks that typically trade in this competition, it's not too surprising.
Yeah, and then we had the big news with DraftKings today. DraftKings, kind of revising everything up. So that was DN and G. So I mean, it's not surprising to see that on kind of go-to stocks, old standby stocks, and of course we have a little bit of the meme stocks, the AMC, the BBBY. Those are the meme names, and then you got U.S. Steel. Obviously, it's an old standby. Amazon. So very typical of the competition from that perspective. All right, so just a quick review to our competitors and top contenders that were repeatedly holding overnights. And if you hold overnights, you're going to get the at first it was 3 strikes, you're out. Now it's pretty much you're out. So do not hold overnights. That's a great way to end your competition early. This is a day trading competition. So if you have not reviewed your strategy in the last week, you should certainly review your strategy, see what's made you successful, what mistakes you've made, what you've learned. Okay, again, just that reminder of no overnights. And certainly, if you've not traded yet, be sure to start the. Well, everybody's either traded already or they have been kicked out of the competition already because you needed to trade by last Friday to make sure that you're at least trading, because this is a traders competition. It is not the race to zero if you haven't traded at all. So you do got to trade. All right, so let's jump right into the news. And so rising rates for stocks to fall. We had a bit of a gap down today. Inflation is on the rise yet again, maybe nominally, but certainly that was what one of the Fed governors warned about, is that inflation seems to be a little bit resilient. And so let's jump right into the news. Inflationary concerns popping up yet again. Fed Governor Michelle Bowman indicating that there will be more rate hikes ahead, that they're sticking to the ideal rate of 2% for inflation. What are your thoughts? I mean, it seems like we get this kind of reoccurring theme that that we're going to be continuing to get rate hikes. I mean, to me, the Fed messaging has been clear. We should expect more rate hikes. It almost is as if the market deludes itself occasionally that the Fed's messages haven't been clear. But I mean, certainly sometimes it does seem like Fed Chairman Powell comes out a bit dovish. That gives hope to the markets. The markets jump on that hope, and then the inflation concerns come back again. So I'd love to hear your thoughts about inflation, how much the Fed is going to raise. Mm-hmm. What are your thoughts on this kind of reoccurring theme of fear?
Well, you know what, Mike, you and I have been talking about this since July, August, when we saw that little bit of a rally because traders thought that the Fed may alter their strategy. I think Powell's been pretty clear. I don't think he's come across dovish at all. It seems to be the narrative, certainly since the beginning of this year, is the Fed saying one thing, the market desperately wants something else. And that's kind of a big disconnect there. I mean, inflation numbers are coming in hot. They were not going to change course. Even if inflation was relatively under control, they're still not going to reverse course, whether it means holding off on interest rate hikes, whether it means cutting anytime in 2023. They are not going to make an abrupt pivot and revisit what happened in the late 70s and early 80s. They're just not going to do that. They've been very clear about that. I do think we will get a couple more rate hikes, certainly not a pivot in strategy for 2023. One good data reading is, not a year make, and we saw what happened this week. It's still coming in hot. They're not going to change course right here, and it almost seems like the market is trying to make something happen that is not on the cards right now. And I feel like
it's usually not a good thing for investors if they are not listening to they always say the old expression is "don't fight the Fed," right? I mean, right. If the Fed is giving messaging of that it's going to continue to raise rates, it's not a good idea to fight the Federal Reserve.
Right, because it works both ways, right? So when the market was going, the past 12, 14 years from the bottom right of the chart to bottom left of the chart to the top right, as much as you wanted to short, as much as you wanted to call a bear market, what did everyone say? You can't fight the Fed. It's not a new phrase. It certainly has been around for decades. It works on the downside as well, right? So absolutely. I feel like there's such a big disconnect in terms of what's happening from a fundamental perspective and what's happening from a macro perspective. And I think we'll continue to be talking about this at least throughout the remainder of the year. And there's just going to be a lot of hyper focus on what's happening with the macro.
Yeah, it's almost like everything is reversed because you get all these hot economic numbers. Yet that would lead you to believe that that would be good things for the economy and for the markets, but because the market's already overheated, it actually becomes the inverse of that because the Fed is trying to cool down the market, cool down the economy, and then the market kind of interprets it one way, but the Fed has to interpret it differently. So it's almost as if good news for the economy is bad news for the markets. It's a very, very difficult concept for many early or new investors to kind of understand.
Right. Well, I think the biggest variable is going to be, and I'm kind of surprised we're not talking about it more. I know a strong employment market kind of balances this out a bit, but credit card balances are really high. People are in fact losing their jobs. I'm still unclear as to how there's still stimmy savings. We haven't gotten those checks in, over a year at this point.
I think they're
So
gone. To be honest with you, I think
I
they're
I I thought they were gone for. I can't imagine that everyone in the United States was that great of a saver, right? They should have
not
technically
possible.
been using this money to live. So I don't understand that whole narrative, but we have credit card balances that are high. People are losing their jobs. Although some of the jobs that have been lost are ones that are in high demand anyway. So I don't think it's going to be that big of a concern. But I think what happens with the consumer and how effective they are in paying off their credit card balances, and does that mean that they stop spending because they're paying credit card balances off? It's just very curious to me how
Yeah.
um, the consumer's not being spoken about more.
I mean, there's definitely a disconnect, some of the narratives to the reality of the marketplace and how things generally function. So let's jump into the next item is the retail investors. I mean, certainly, retail investors are still flooding into the markets, even as rates are most likely to go higher and inflation continues to rise. I mean, generally, I mean, this rally, call it the January effect or whatever. The whole market was down in 2022, so you can get a January effect for the entire market in January of 2023. I understand that, but this is probably not a great time to be barreling into the market. And it does seem like these names like AMC, Bed Bath and Beyond, these names have certainly got a bit of an uptick. Certainly, Tesla has had an amazing uptick. Even Facebook, which we're going to be talking about next, who are the winners and losers from this quarter's earnings season. What are your thoughts about retail investors kind of buying the dip and staying into the markets here?
It's interesting. Our economic team at NASDAQ has done some work around it. I mean, they look at fund flows all the time, and really, retail investors have been going into ETFs and thematic ETFs. So they're investing more in themes
Indexes.
versus specific stocks. And they might day trade around some of the names that, on the chart that you had showed before. But in terms of investing, which is different than trading, they really seem to be focused on thematics, which I think is interesting, especially in newer sectors like climate tech,
Mhm.
AI, newer technologies such as that, EV, where it's hard to pick like the axe in the space, but getting
Yeah.
exposure to it in a more broad-based sense. So I think
Mhm.
it's really interesting that that's where we're seeing the flows go. From an investing perspective, but to your point, they're trading in those names, that we saw earlier that are moving on,
Yeah.
very specific pieces of
I mean,
news.
that's kind of it. That's kind of enheartening. I mean, that's good to see that retail investors are choosing a little bit more of a diversified approach by choosing in the entire industry rather than going into specific names. I mean, that's excellent research. It's excellent analysis. And that does actually give me a little bit of hope for the retail investor that at least they're being diversified and hopefully they have a long-term time horizon. But to me, it concerns me to be barreling into the stock market after you're up as much as we're up in 1 month and none of the underlying fundamental factors have changed, meaning the Fed is still going to be raising rates, inflation is still a concern, nothing has changed. Yet, people are jumping back into the market, and there's a lot of indication that things are going to have to cool down considerably. So, that does at least provide a little bit of diversification and protection from that. But overall, after earnings seasons, and I know you can't really talk too much about individual stocks, but certainly, who are the winners and the losers for this earnings season? So this is the annual results earnings season. I mentioned already that that Facebook and Meta, as they're called these days, and Alphabet and Google. Google was clearly a loser. I mean, they gapped down on their earnings results. and have pretty much lost some value, whereas Meta and Facebook certainly gapped up from a pretty low point, having been knocked down already, and was one of the biggest losers in 2022. So overall, who were the biggest winners and losers this earnings season from your perspective?
Well, it's interesting. I mentioned before the strength of the consumer, and 17 of the 33 retail components of the S&P 500 have reported, and we're going to get a number of the big ones next week. So I think that'll be an interesting read into that. So, I think earnings season, it hasn't been awful, but it hasn't been fantastic. There were some big misses from names such as Meta, Google, Amazon, Apple, setting their growth rates lower. But what's interesting is not all these names are punished for falling short of expectations, right? So I feel like even though the quarters weren't that bad, they weren't that great. I wonder if a lot of it was, and this has been kind of the narrative this week, how much short covering was out there. But if you think about it, only about 75% of S&P 500 companies have beat their estimates. And that's a little bit lower than the averages, which are typically around 77-80%. But I think, next week is going to be a big tell when it comes to consumer, because, Mike, with retail, it's the haves and the have-nots, right? Discounters have done well, which has been the case. And, more niche retailers continue to struggle, but it really is a curious reaction. I think a lot of things are moving in terms, they were down so much. There's some short covering there. And then there was so much hopium over the past 6 weeks in terms of what the Fed might or might not do. So I think a lot of those reactions have been more macro than fundamental.
Yeah. No, it makes sense. I mean, I would say that you're 100% right. I mean, if you go through the list of the big names that have already announced, you got Apple with a big miss. They haven't missed in ages. They missed. You have Alphabet or Google with a big miss. You had, Meta with a big kind of, upside surprise. But Meta had been down so much and had been so much under pressure prior to all things, kind of melting down. Then you certainly have had, some other, some upside surprises, which may not be too big of a surprise. Like DraftKings today was a kind of a revision up going forward in the future, as I guess, people are betting more on sports betting or whatever it's called. But needless to say, and not that they're even a big deal anyway, they're not one of the tech giants. Amazon would certainly be a miss. They certainly came out negative. So I would say from my own feel, okay, and my own analysis up to this point, it's kind of been slightly more bearish than bullish. And, that's pretty much that. Hold on one second. All right. So anyway, let's jump right on to the charts. Jill, I want to thank you so much for being here. Okay. And certainly giving your commentary. I want to wish you a wonderful week. And next week is the final week of our #1 best trader competition. And I look forward to having you back on the show.
All right. Sounds good. Have a great weekend, everyone. Take care.
Have a good weekend. All right. Bye-bye, Joe. Excuse me one second. I'm going to transfer my screen here. Share screen. New share. All right, let me bring up my Dash Trader charts here. Just give me 1 second. Actually, I'm just going to stop my share for 1 second. Share, new share. Excuse me 1 second. Actually, it's good. Looks like I got it all okay. So here is my Dash Trader charts. I'm going to go through a couple of the actually, let me bring my video back on. All right, so let me bring up my daily chart of this is the SPY on the daily. So we've kind of formed a little bit of a bull flag pattern as we made a big move up off the lows at the end of 2022. We kind of gapped down, tested the low here, but we've now price has moved below the moving averages, which would be considered bearish from moving average perspective. We did rebound. If you look here at the intraday chart, we did rebound quite a bit. We kind of gapped down, tried to break down, failed to break down, moved back to the upside, faded the gap a considerable amount. And then, of course, we'll see what Monday brings, but certainly we have now moved below the major moving averages. We're below the 10-period moving average. We're below the 20-period moving average. Now, this is the interesting part. I'm just going to load up my my MACD indicator on my dash charts, and I'm going to load up my CCI. CCI and MACD. Let's see if it comes up right. So here we go. So this is the CCI and the MACD on the 15-minute. Let me bring up the daily chart. So we're at a deeply oversold value. We're just slightly into the deeply oversold area on the CCI, but our MACD is just starting to cross over. So our MACD signal line has crossed over and gone negative. Our histogram has also gone negative. So the MACD tends to be a little bit more of a long-term trend pattern indicator, whereas the CCI tends to be a little bit of a indicating that to the short term, we might be ready for a little bounce. Let's take a look at technology. All right, so from a technology, from the NASDAQ QQQ, what we see here is that we've already kind of sold off. We're not deeply oversold on the QQQ yet. We are also not below the moving averages on the QQQ yet, but we have had 2 bearish weeks on the QQQ, which indicates the NASDAQ 100, which is the main technology index. Let's take a look at Goog, because we mentioned Goog today. So here, Goog is definitely bearish. It is far relatively weaker than the regular market. And certainly it's testing its 50-period moving average for another move down, which would bring it back to the lows. And a lot of times what you'll see is that the leaders will lead the market down. So Apple's relatively stronger than the market. So Apple is holding the market up. Very interesting that we've had a 1, 2, 3, 4, 5, 6, 7-time overbought reading on the CCI on Apple, which we are also just crossing over. So as goes Apple, so goes the market. So if Apple starts to roll over and die, it will carry the market down. Certainly Tesla is another leader of the market. SLA. Tesla, let's see. TSLA. There's our Tesla. I mean, Tesla is absolutely astounding. I mean, if Tesla started leading the tech sector, far relatively stronger than the other stocks. So relative strength, these leaders, if the leaders start to roll over, they will generally start to bring the market down. Last but not least, let's take a look at GLD. All right, GLD gold, after that big pullback, gold is starting to level off. And GBTC. And I'm going to switch back and wrap things up. Okay, Bitcoin certainly having a little bit of a resurgence, and is off its lows, but certainly still some signs of being overbought. I'm going to wrap things up. Go back to my slides. And just remind everybody to stay up to date with all things Dash by signing up to our monthly newsletter and emails. Okay, simply fill out the form at the bottom of the webpage at www.dashtrader.com. Subscribe to our YouTube channel, Dash Trader TV, and the Dash Trader Newsroom for reminders. Follow us on social media at dash.com, LinkedIn, Twitter, Facebook, and Instagram. One thing you must certainly do is continue to do your best in the #1 best traders competition. A big reminder. Thank you to our sponsor, Cobra Trading. Thank you to our sponsor, Benzinga. And obviously, Best of luck to all the competitors in the #1 Best Trader competition, our first competition of the year. And certainly the competition, this is your last chance to pull it out and be the #1 Best Trader. Thank you so much for joining us. Have a great weekend, everybody. See you all next week. Mike DeJoy signing off. Trade well.
Record.